Mr. Mark Selby, how are we, sir?
I am very good, Mr. Matthew Gordon.
I'm glad to hear it. Big week, lots of news, and I want to talk about those Saudis in a second. That's the big news this week. But first, let's kind of start with the market prices and what's happening there.
So another exciting week in the summer doldrums. Basically, things popped up to the top end of the range. Actually, got above 22,000 briefly, but basically sitting, at the upper end of the 20 to 22,000 range where we've been since the end of June. In the Chinese market, some interesting things going on. Sulfate prices remain flat, and still the market we saw a big surge in orders in June, but haven't seen sort of a surge follow through yet at this point in time. What's surprising though is we've been seeing, and it's been a couple of weeks now where we've seen ore prices tick higher and NPI prices tick higher, and we really haven't seen stainless prices move yet. So there were some rumors floating around the market this week that the Chinese State Reserve Bureau has been stocking nickel. And so maybe that gave some people, the courage to maybe, do a little restocking if the government's buying. It's a good time to pick up more nickel. So, but again, we'll see what happens. That's a good signal that maybe we're going to see some meaningful improvements in the stainless market over the next few weeks.
Okay, all good news. Anything coming out of China that we need to know about?
No, that's the key piece.
All quiet. Okay, on that front. Yeah. Right, this is the bit that I want to talk about, because I think we talked about this potentially, certainly a while ago. You've mentioned it to me. Saudi Arabia investing into Vale, now taking a 10% stake at 3.4 billion. It's nothing to them, but to the mining sector, this is a big move. What's happening there?
Yeah, no, that's the key piece here. I mean, it's a sort of a short one-page news release. It's been talked about happening, for about the last 4 or 5 months that they're close to this deal. But the big read-through for people listening is, if people believe the energy transition is real, you've got, tens, if not hundreds of X more capital employed in the oil and gas sector. And even if a trickle of that capital starts to move over into the mining, because again, if energy transition is real, if oil and gas has peaked, and those people who are in the oil and gas business need to go find a new business that's growing in the future, then it's rational that they would start deploying capital into the business that's replacing their current business, particularly because they're relatively adjacent to each other. So, I think the combination of, we talked about this, a month or so ago was, ExxonMobil getting into the lithium business in the Southeast US is again, a little beachhead, in the first little sign that's happening. I think the follow through now of seeing the Saudis, who are basically, buying, Vale's base metal businesses, nickel and copper, deploying a bunch of capital into the nickel and copper sector is a pretty interesting move. And so it'll be really interesting to watch this space over the next 12 to 24 months, because again, the relative size of the capital pools, even if a fraction of that comes across, that'll really feel like a tidal wave coming into the market. And it also, that'll be a signal to the generalists, who have been sitting on the sidelines really in the mining space, over the last while here, that this is a sector that we now need to rotate into. And again, that's something where if they change from 1.5% allocated to basic resources to, 2%, again, that's something that just feels like a flood of capital coming at this market.
Well, I mean, let's just focus on that a second. I don't want anyone to kind of miss what we're talking about here. Is Saudi Arabia obviously has made its money in oil game. They are looking to transition away from a dependence on oil into other things like green hydrogen, all sorts of renewable projects, base metals, a big piece of that transition. So this is really important. So this is only, I mean, obviously for the Saudis, 3.4 billion is nothing, but in terms of new money coming into the space, which we're all crying out for, because we're all sitting arguing about, which company's got the best, the best assets, and we're moving money around a very small table. This makes the table a much bigger. New money will kind of free lots of companies up to do things that they've been wanting to do, but they've been cash constrained. So you talked about some generalists looking into what Saudi Arabia is doing here and saying, well, actually, if they're into this, maybe we should be into this. Is it as simple as that, or is it or the generalists going to take a little while to kind of get on board? How quickly is this money flowed in?
Oh, it'll take, again, the generalists don't never move particularly quickly. But it's one of those things where, if you all of a sudden then, see a follow up from, say, the UAE, there's Mubadala, there's a bunch of other Mideast capital funds. If you start to see them making substantial investments into some of these sectors, all of us, or you see another oil and gas company make another lithium investment, it's one of those things where they may not move off the first data point, may not move off the second data point, but if all of a sudden you get a cluster of 3, 4, 5 things, then, that's the kind of thing that all of a sudden, starts to attract, some meaningful capital, coming our way, which again will be transformative, given where we're sitting today.
Well, it's amazing. I think, so just in context, so that's 3.4 billion is 1% of 2022's revenue, oil revenue for Saudi Arabia. It's small beer today, but if they get the taste for this could be really, really interesting indeed. Let's move on to other geographies. So that's big news, guys. Pay attention. It's a real driver. Australia, catching up a bit.
So surprisingly, somehow, one of the countries that actually produces a decent amount of nickel did not include nickel on the critical minerals list, even though I think pretty much every other country has it. So they are now updating the list, and nickel and potentially copper are both going to be on that list, which will be helpful to the existing industry in there, because again, there's not near, the programs there aren't quite as rich as they are in the United States and Canada, but there's still a bunch of incentives that'll help developers in that space. So it's nice to see Australia getting caught up, because again, it's one of the few places geologically where you do have a chunk of nickel sitting there. So hopefully that will continue to spur further investment in the nickel space down under.
Right, and I kind of sticking with Australia, Wiji Nickel, so it's obviously spun out of Neo Metals. Bit of news from them as well.
Yeah, so Wiji has a set of properties just southwest of Kambalda. It was actually part of the land package that we acquired when we acquired the Beta Hunt mine for $12 million back in 2016. But we sold it off for, I think, $1 million or $2 million because we needed the capital at that point in time, and not much was available. Again, the team there running it is ex-Westgold. Steve Norgard is there. And so, a good mining guy running it. And so, they've had some pretty good step outs from, they inherited a bunch of existing nickel resources, and then have done a good job doing some decent step out drilling. So, you've got 29 meters at 1.7% nickel and 5 meters with 5 meters at 3 in there. And that's just from 88 meters deep. So, again, decent higher grade, shallower resource, and then some good infill drilling, of the kind of, widths, widths and grade, that look pretty interesting. So, good to see, that set of deposits developing on track.
Okay, and then one final bit of company news for you, dash off. Magna Metals PEA came out. What did you make of it?
Yeah, so it's good to see again that they picked up the Denison mine, which is the old Crean Hill mine, Inco, and Magna has renamed it to its old name called Crean Hill. This was a past producing Inco mine, that was closed. It was part of a PGM deal, which is how Sibanye ended up with it. The good thing is, there is some open pittable resource that's there, as well as some historical underground resources. Magna has put out some pretty splashy drill holes. Again, in Sudbury, in certain structures, you can get some pretty nifty grades. The interesting thing is, the headline numbers were pretty good, but then the market has come off about 15%. Now, part of it is it popped up the week before about 10%, but you're seeing it, the drop off from there. So headline wise, yeah, it's great. You basically have a 22% IRR, 15-year mine life, roughly 10,000 tons of nickel per year over 15 years. So, in these days, that's a decent size asset, and the NPV is about 200 million Canadian in total. What I think the market reacted negatively to was, the total capital that they're talking about is 129 million to get started. 48 million was what they called advanced exploration. 24 million in open pit, and then 57 million in underground. I think in a lot of people's minds, what they were thinking is, this was going to be a small scale open pit restart. So we're kind of focused closer to the 24 million. And I think we're surprised by both the 48 million of exploration and then the underground capital. I mean, it's a sizable underground operation at about 3,500 tons a day. And so I think that was number one. Number two, Magna had put out some pretty splashy high-grade intervals. Again, there are structures there that can yield some pretty juicy grades. To be fair, some of this has not been incorporated into this particular PEA, into this engineering study. It'll have to wait for sort of the next study that's there. But again, as I said many, many times, it's good to get a high-grade interval, but generally by the time you often get it to a mineable width, in a lot of these deposits, the grade gets diluted down. So, the grade in the PEA over the mine life was, 0.6 nickel, 0.6 copper, and just over 1 gram per ton PGMs, which, again, I think the resources have improved versus what they inherited. But, the resource grade is the resource grade. So, that's what you end up mining. So, again, I think given that they had, multi-percent nickel, multi-gram per ton platinum grades, people were like, oh, okay, I was maybe expecting some of that. And then I think the third reason is just valuation. They had done a great job promoting it off the back of that acquisition. And at a 75-cent share price, which is where they're sitting before they announced the deal, they had $120 million market cap, versus a $200 million NPV for the project. That in this market was pretty good. At that point, we'd be worth almost $1 billion Canadian based on our PEA, and we're definitely not trading at those kind of levels. So, I think in terms of relative valuation, they still have their Shakespeare deposit, which also adds, some net asset value in there. But, obviously Denison's become the flagship asset. And so, I just think for some investors, that relative value trade-off got pretty tough.
Right. Okay. Well, we need all of the above. You've always said it. So I'm sure they're going to work their way through all of the above. And I'll talk to them soon to kind of hear it from the horse's mouth as well. Just one final thing. There's a little bit of talk or potential for Russian nickel to be subject to sanctions in UK, Europe. Do you see that happening?
Yeah, I think it could. I mean, they basically a lot of producers effectively self-sanctioned. So they got rid of as much Russian nickel as possible. It made Glencore and Vale's day. So, in Europe, shortly after the Russian war, you saw massive increases in nickel premiums in Europe at that time as people tried to get their hands on non-Russian nickel. To be honest, I don't know exactly how much is still going in there, but it'll still be an issue because, pre-pandemic, you probably had almost half of Russian supply ending up in the European market. So, to have to reallocate that much nickel globally, does have some friction costs associated with it. And so, we'll see how we go. Again, this year, stainless steel in Europe is a big driver of nickel demand, and stainless has been a little bit soft, so it may not be as painful. But that situation is not going to continue forever. So we'll see what happens as we go into 2024 from a stainless front.
Okay, Mark. Well, I appreciate your time today. We'll see you next week.
Sounds good, sir.